I think it's a combination of a positive macro, probably better than we expected, and the fact that our continued transformation is probably boosting our results, and our lines of defense are keeping our cost of risk low. So as a result of all that, we've been able to increase NII more than we expected by both the impact on rates, which are more positive, but also a management of the path-through that is a lot more effective than we expected. At the same time, the transformation is allowing us to continue to reduce cost, continue to improve operational efficiency and capital efficiency, and that delivered the 2.1 billion of net income we did this quarter.
Yeah, I want to pick up on two things you said. First is positive macro, which is interesting given a lot of the banking issues that have flared up in the last month. So I'd like to hear your take on that and sort of how it's going to impact sentiment. But then also on NIIs, a lot of analysts that I speak to tell me that we are at peak earnings potential now, either because we're getting towards the end of the ECB rate hiking cycle, or because for banks, you're going to have to start being a lot more competitive on the deposit side.
Well, I think that we are close to the peak in NII. We expect it sometimes between the second and the third quarter. Rates need to still come up a little bit in Europe, or at least the ECB is determined to do that. And we're seeing a much more positive dynamic on pass-through, so on beta of deposit than we expected. That is due to volatility and risk. Our depositors and depositors in general are now rewarding stronger banks. There is a flight to quality. Last year, we ended the year with a pass-through at 20%. We thought we would go to 40, 35 to 40. At the end of our first quarter, we're at 22, which means that depositors are staying with us, even if we are a little bit less attractive, because they are valuing the strengths of the bank, the liquidity of the bank, and what the bank is doing. As such, we think that while the rates will go up and then stay there, the pass-through will continue to go up, but less than we expected, and that has allowed us to improve on our guidance for the year.
Very clear. Let me ask you about your cost of risk guidance. It's still 30 to 35 basis points. Yesterday, we had the ECB bank lending survey come out showing that we are beginning to see a tightening of conditions, both on supply and on the demand side. What is the outlook there, and what are you actually doing as a bank?
Well, if you take the entire 2022 for UniCredit, and you take out of there the overlays we built for the future, and you take out of there the one-off provisions we took for Russia, our cost of risk has remained in the single digits for the entire 2022. In 2023 first quarter, we are again in the single digits, 8 basis points. So actually, we see a much more benign risk profile in the market, and we are not seeing any indication for the moment of worsening in our cost of risk. Now, while we're not seeing it, we do see the stress in the economy, the stress in families, all of that, and therefore we are prepared. That's why, while we guide still for 30 to 35 basis points guidance on risk this year, we think there is potentially risk on the upside, i.e. a benign upside where we will come below that. In addition to all that, if the economy and our clients were to become more risky, we have on the side an entire year of cost of risk in 1.8 billion overlays that we will use to keep our cost of risk for the year down. So we're actually quite confident for that, at least as refers to the next couple of years.